Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1.5% for the week. And since it's the first week of the year, that means the S&P is down 1.5% for the year. NASDAQ was down 3.2%. So what gives? What's going on there? Well, look, we had 9 weeks of consecutive market gains, so it's not surprising to have a breather. We did have jobs data for December come out. At the surface level, it looks like actually pretty good. We had better than expected 216,000 jobs. Unemployment rate held steady at 3.7. But when you look, if you double click, if you will, and you look at the numbers, there was downward revisions for October and November, which cuts down like the 3-month moving average of payroll job gains. There was also wage growth accelerated to 4.1% year over year. The expectation was, or the consensus was 3.9%. So wage growth is very much tied to inflation growth. So if wage growth is holding up and the job numbers are deteriorating, that kind of throws a little bit of a wrinkle to the story we've had of the soft landing, right? Where inflation is coming down, but the economy is holding up, especially when it comes to employment. Not enough to derail the whole story, but definitely a number that was more noisy than usual, with wage growth remaining steady and the job numbers under the surface showing weakness. Next week, we have CPI and PPI inflation data, which will give us further color for the inflation situation the last month. That's it for this week. Stay tuned for next week.